All right, no tariff inflation. Jay Powell notwithstanding, a new study by the Council of Economic Advisors and its chair, Steve Myron, shows, as many others believe, tariffs do not cause inflation. So joining us now is old friend Joe Lavorgna, who is now the counselor to the Treasury Secretary. Hi, Joe. Steve Myron's study is pretty good. Oh, here, I'll just read something. Overall, goods prices in the personal consumption deflator, that's the Fed's favorite, jumped by 0.4 from December through May. 0.4. That is 1.1% at an annual rate, okay? Now, 2 points I want to make. Number one, 1.1% at an annual rate. Tariffs don't cause inflation because we've been having plenty of tariffs in that period. And number two, 1.1 is less than the Fed's target of 2.0. So why the heck haven't they taken the Fed funds rate down? You can answer them in order. First of all, tariff inflation. Go ahead, Joe. Go.
Larry, what's amazing is in Stephen's piece, they did such great work, is that if you look at the goods piece, it actually fell. It's 50 basis points lower than what overall PCE goods have shown. So imports of goods were down. And in the CPI, the Consumer Price Index, well, that's not the Fed's preferred measure. That's the measure that most businesses and households know about. That fell even more. So it's not even like inflation is under 2%. It actually fell for those goods that supposedly were supposed to go up because of the tariffs. It's really remarkable. And it reflects the fact, as you and I have talked before, foreign producers have absorbed this in their margin. Yes. The U.S. being the biggest consumer in the world really dictates the terms, and President Trump knows that. You know,
I've said this before. Austin Goolsbee, who is now the president of the Chicago Fed, and a very smart guy, taught at the University of Chicago. He was Obama's guy, head of the Council of Economic Advisors. When Austin takes his political hat off, he's terrific. He gave an interview and said basically the same thing. He said there's cost sharing between the exporters who eat a lot of it and the companies themselves who eat it. The consumers will not eat it. And so that's a
yeah, that's exactly what's happened. Right. And the other thing, Larry, too, is, as you know, inflation is always and everywhere a monetary phenomenon.
Yes.
And there are others, even on the Fed, that understand that. Chris Waller has made the point that, look, the data has been very good. And he actually has said he would support a rate cut as soon as July. And he doesn't look at the tariffs as being inflationary. If anything, potentially a price level adjustment. But even there, the adjustment we've had thus far has been down, not up.
Well, look I want Waller, I know him very well, and Mickey Bowman, another Trump appointee. If they don't get a rate cut in July, I want to see their names as dissenters from the decision. Joe, I'm sick and tired of this Fed groupthink. Every month, 12-0, they endorse what Jay Powell wants to do. At least those two should register dissents, and at least they'd be sending a message. And whether that embarrasses Jay Powell or not, he should have been cutting rates much sooner. But what's he waiting for?
Well, I mean, to Vice Chair Bowman's point last year, she was right out front not wanting to cut to 50 at that time. And then, of course, market yield sold off quite significantly.
Did she dissent
Larry,
at that point, Joe Lavorgna?
She did dissent. She dissented on the 50. But
yes.
But the key point, Larry, is that, look, inflation has consistently underperformed expectations in spite of tariffs. The labor market is still tight. The Phillips curve doesn't work. There's no trade-off between inflation and unemployment. Inflation expectations in the New York Fed this week, they came down. Long-term inflation expectations are stable. This is great news and ultimately is going to support certainly lower market rates. So we'll see what happens.
President Trump is right. If we had lower rates and the yield curve came down, we would save a fortune on the interest expense for the debt. We would save a fortune. He makes that point. $300 billion or $600 billion, depending on the time frame. He's right about that. And the Federal Reserve should have that. They understand fiscal policy, for goodness sakes. That's another, yes. That's another thing he's missed. He's at war. If you ask me, Joe Lavorgna, I mean this. He is at war with Trump. And the board staff is at war with Trump because they're making this stuff as they go along. This tariffs are inflationary.
No, understandable.
They're making it up.
President Trump is, I don't know, he's been right about the joke is he's right about everything, and it seems to be the case.
Yes.
If you look at the Treasury market, basically almost all yields are pretty much below. Well, if you look through the 10-year, it's certainly below the range, the high end of the range of the Fed funds rate. So that's kind of interesting. What that tells me, Larry, is that inflation is going to come down, and that's ultimately the big driver of rates. So that to me is very interesting.
The market forecast. Good for you. Joe Lavorgna, good luck on the new job, buddy. We